Hello everyone, welcome to the market update. My name is Kay Kim with the Traders Club. Today's April 7, 2017, Friday. Market is up as I record this video. Should be up another 30 minutes or so. But I hope you guys had a great week trading this week. Spring is here and weather is starting to be very, very nice here up here in the Twin Cities. But hope you guys, wherever you're staying at, enjoying your week or enjoying your weather. Enjoy if you're staying down in West, enjoy your warm weather all throughout the year. But we Midwest people just go crazy when the weather's nice because we get winter a lot. But I actually kind of like that because you start to appreciate what you don't have, and when it's winter, you look forward to summer. When it's summer, you kind of look forward to the winter. I'm sure if you guys got it down in West, California or Florida, you'd be like, what? You look for the winter? And we actually do. But anyway, looking at Spider here, not a lot has happened since my market update last week. I mean, these are levels I've drawn last week. Still, we're just range bound here. But just quickly, this was what? A few days ago, market actually gapped up. And then it looked very, very bullish here. And then Fed minutes happened. And the market tanked, came down, completely flushed through the gap, and then closed below the lows. And so I think a lot of bears were looking for the follow through. For bears though, when you're dealing with the uptrend like this, right? When you're dealing with the uptrend since November, it's all about momentum, right? For bears. Right? Once they lose momentum because of the overall wind. When I say overall wind, I mean primary term, intermediate term trend, which is bullish. So you can see right there, it's interesting to note that this was a Fed's day bullish move, and this was a Fed's day. But what happened was we saw the gap down look like a breakaway gap to the downside. And then you see momentum, boom, 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 flush, right? And once the momentum started kind of losing here, we did see pretty gigantic gap down. The bulls took advantage of that little bit of slowdown. See, if we're in a bear market, if this has been coming down, slow down actually favors the bears and continues lower, okay? But when we're in a bull market like this, since we've been in November, this slowing down actually favors the bulls. Doesn't mean that it's going to go right back up on Monday. It means even if this thing sees another failed move to the downside, there will be a lot of dip buyers showing up right on that 50 MA. There will be a lot of dip buyers. So I wouldn't be surprised if we do lose to 234.64 to the downside intraday. I wouldn't be surprised that this thing sees, something like this, kind of traps a lot of both bull and bear. What I mean by how he traps both bull and bear, because it's going to take out the stops of a buyers, and then it's going to have shorts adding to their shorts or starting, and then goes right back. I mean, that's kind of what happened here. See? So when you micromanage this is how this market is designed to take your money on both directions. This is designed to take out, a lot of shorts, they acting like they made money on this move. But let's be honest, when this thing gapped up huge and started rallying, a lot of shorts, bears, got short squeezed there, and they had to cover. Many of them, right? And then maybe they had to reshort here or jump back. And a lot of times, a lot of times when you start to lose and lose and lose and get stopped out here and there multiple times, you lose that spirit to go back in. Kind of get scared of kind of getting back into position, and you tend to kind of wait. But that's what happens if you micromanage. Obviously, not everybody trades like me. I'm much, much more longer term. If you guys been following me long enough, you guys know that how I trade things. I'm still holding my calls on the, Russell, IWM, and CD. I've been holding it for a while now. And, a lot of, which I, talked about on my blog, the positions that I've been accumulating here in that vicinity. I'm still holding a lot of those. And once I get into a position, I don't easily get out. At least I hold 3 months or so. But so here, going into next week here, this is a level to watch. Obviously, we have a downtrend here. So I think once the bulls, you know, obviously I'm a little bit biased here, but I am biased to the upside because we're on an uptrend. We're on an uptrend, right? I didn't predict this either. I'm just gonna flat out tell you, did I predict this? No, I didn't predict it. I didn't saw that coming. But what I did say that this move didn't have me get out of my positions, my long positions. I didn't close out any of my positions because of that. I didn't get stopped out of any of my positions because of that, and which I said right here on this day that I am holding through all of my positions. But I did talk about on my article, the next big support, which I depicted these levels, which we could see strong level of support, which which I thought the 231 will be strong levels of support, where these levels coincide with each other. And I think with this move, it looks like we're kind of bull flagging possibly. It looks like that, we got that move and then bull flag. I mean, sometimes you'll see that move and you get a bull flag and then you get a move and then possibly a bull pennant and then a move, right? And so something that I've been talking about is that there's going to be more surprises for the bears in an uptrend than bulls, right? Because I mean, how many people do you think that saw this thing coming like this after this thing gapping down this much? This was back in what? March 27th, right? Well, the bears were calling for Black Monday. Nobody really saw that coming. So there were more surprises for the bears. I mean, how many people saw that this thing was going to bounce right on here? Nobody did. I didn't either, right? So I continue to give benefit of the doubt to the buyers in the intermediate term and the primary term. And remember just understand my terms when I say intermediate and primary. We're talking long term. When I say minor term, I'm talking about this. In the minor term, I categorize as kind of a neutral zone. Neutral to slight bullish, but neutral zone. Until this thing starts to break out of these levels. Once this thing starts to cultivate higher lows and higher highs, my minor term sentiment will change to bullish. But as of today, I'll say neutral to slightly bullish here. So let's see how it plays out next week, and I'll update you guys with an article or something like this. Something happens next week, but for now, we're just kind of see how it plays out here. Let's go to Russell 2000. Russell 2000 still kind of hanging out. That's the level. Let's make this level right here. We got this downtrend. So as far as the structure is concerned, just looking at just last few months, I think bears really wanted to make new lows. Obviously, this could possibly be a bear flag. If you're a bear here, you really want to see lower highs and lower lows continuing and then continuing to make new low. But if this becomes that higher low, and then in the event that this thing gets above 137.96, that downtrend is no longer. And that's what I'm hoping to see, expecting actually, because I've been accumulating calls in that vicinity here. They're still a losing position. And I have a journal post on that along with my Citigroup, which I wouldn't be talking about. I'll post the update on that maybe next week, early next week. But for now, so if this becomes a higher low, we don't know that yet. This will become a higher low once we create higher high. So if you want to understand minor term trend sentiment, that's how you can see it. So we currently do have lower highs here and then lower lows. And this to me could possibly be like equal highs. But if this becomes a higher low and creates a higher high, pullbacks to create higher low, then you can look at this as inverted head and shoulders, right? If that happens, I might even buy more here at that time. When this goes up, break out, and pulls back, shake some bulls and bears out, and then get up. That's kind of what I think it possibly could happen. So let's continue. Let's go to NASDAQ here. Q still holding up here, just above the 20. You know, you can see just kind of grinding. And just because it moved so much doesn't mean it has to come down. I mean, just because a Qs is extended doesn't mean everything else has to crash. You know, what Qs can very well do is just be range bound. Can consolidate while the, you know, the weak index like the Russell 2000 starts to rally, and then maybe, you know, transport starts to rally, or the bank starts to rally. You know, a lot of times, you know, people always want to talk about money rotation. That's kind of indices fool you. You know how people always say stuff like, oh, I wouldn't be bullish until I see all the indices I have equal harmony. That's never going to happen. When was the last time it happened? I mean, this was back in what? November and October. Everybody was talking about these Qs. Oh, Qs are weak. Oh, Qs. The NASDAQ is not participating. Therefore, the whole thing is going to crash down. And then what happened? Well, the Qs came back. And so now the NASDAQ is up. Well, we can possibly expect some, you know, consolidation or potentially maybe 5% correction while the other indices rally. I mean, that's how the market continues to move to the upside. It kind of, you know, wait for one and another. It's never going to be a day. You're never going to see a day where everything is perfect. NASDAQ is going up, oh, the Dow Jones going up, and then Spider going up, and then in the Russell 2000 going up, and the banks is going up. Oh yes, everything's bullish. And once everything's bullish, that's the time to possibly short, probably. But you see how funny some experts will say that. I wouldn't even call them an expert, but so don't worry about these things while the index is giving you this mixed signals. If you go back in 2008 and study 2008 market crash pattern, you will see that all the indices, SEMI, Dow, the NASDAQ, the Russell, S&P 500, and even the banks, they were all forming major topping pattern. You pay attention once you start to see all the indices start to show weakness. We're not seeing weakness on the NASDAQ. We're on an uptrend. That's not a weakness. We're not seeing weakness on Dow. We're not seeing weakness. I'm talking about overall trend. We're not seeing weakness on the S&P 500. We're possibly seeing some weakness on the Russell 2000 because it hasn't moved that much, and the banks. But because other indices are still showing signs of bullishness, I want to talk about, we'll look at Dow Jones here real quick too, that the market is healthy. There's no reason to call for the crash or a meltdown. How many people thought that there will be a Black Friday because of the Syria attack yesterday? Bears want to just always want to overreact to everything. It's just so crazy. But Dow Jones has been acting as support here. This rising pivot. We are sandwiched between the rising 50 and the 20. But that's kind of what it does. It goes up, consolidate a little bit, go back up, and then consolidate a little bit here. Can we lose the level? Yes, anything is possible, but obviously you can see the next level is this 100 SMA. But again, because we're on an uptrend, without me saying that, hey, because it has gone up so much, I'm looking for that. That is a stupid thing. What I would say is this: because we're on an uptrend, I'll continue to give benefit of the doubt to the buyers since it's been up since November of 2016. Right? And somebody asked me, well, when would you be very cautious on the market? Well, if I start to see Dow Jones start to see that happening, and I start to see Spider showing, start to see breaking and cultivating lower lows and lower highs. We don't have lower lows and lower highs on any indices. Again, I'm talking primary term, not minor term. Let's go to banks, and I'll close the video. End the video for today. I'm not gonna be looking at metals and gold today. It hasn't done much since last week, and I'm kind of busy today, so I want to keep this short. Banks. This is here. I'm gonna redraw this. Here we're still kind of holding this level here. We are below 50 and 20, and they're crossing back down to the downside. So that's a kind of a minor term cautionary signal here. So we'll see how that plays out. But sometimes that kind of stuff can happen here. You know, like right here look like they are crossing lower. You can see the 20 and the 50. This was back in 2016, October, early October, and then like one move just kind of changed the whole theme here. So, and right now, obviously, I would just kind of look at this level as a resistance watch, and this is support there. You know what I wanted to do? I actually want to go to 65 minutes and see kind of a, yeah. So if we look at 65 minutes here on the XLF, it failed to make new low. So we are holding this here. So if we get above 23.93, that will be minor term inverted head and shoulders, confirming. So that's the level to watch, right? Have a great weekend. Good luck trading next week. I'll talk to you next week.